Hi, welcome to this US market outlook video. This is based on the market dynamics that we have right now in the first week of February 2026. So what we're seeing now is a great rotation and a 7,000 wall. If you look at the market right now, it's at a crossroads, and S&P 500 chart is showing it's trying to reach a 7,000 level, right? And it's hitting a massive psychological wall at this point. We've been seeing 6,800 to 7,000 all of last month. So we're seeing a lot of sell America kind of trade, due to institutional friction in DC and whatnot. But if you look at the charts, we actually see a bull market it's losing its magnificent seven crutch and finally starting to walk on its own, right? It's not really breakdown at this point. We also see a great rotation, right? We're witnessing a great rotation for a long time. We've seen big tech being the only game in town, but right now we see a massive shift into cyclicals and small caps. Mm, all of last month, we saw Russell 2000 surge over 5%, right? It really outperformed the tech-savvy Nasdaq. We're seeing that the market is betting more on a run-it-hot economy, fueled by policy stimulus and deregulation. So if you're still heavy into big tech, then you probably want to look into energy, materials, and industrials, which I see as possibly big new leaders, in this year, right? Also, a few warning signs. We see that inflation is proving to be sticky, right? We're hovering near 3%. We want it to be at 2%, ideally. So we have a new leadership for the Fed chair, and so the market is pricing in a more hawkish stance. We also see gold and silver reach record highs. That's really more of a hedge against currency instability for the most part, right? So strategy and tips, I'd say for the next 30 days, it'd be like, first you watch 7,000 level. If you have a clear break above 7,000 on S&P with maybe strong earnings from companies like Alphabet or Amazon this week, then it could trigger a run, maybe up to 7,250. You want to hold on to a barbell kind of a strategy. You want to balance your high growth AI exposure with the high quality value stocks. You want to look at late cycle tech companies like Western Digital, maybe Corning, that provide the hardware for the AI ecosystem. And don't forget the commodities with the Middle East tensions, trade policy shifts, and other such things. Energy and metals are, at this point, working as growth drivers. So the trend, I'd say, is still up. We've had a leadership change. And so we've got to adapt your portfolio. Don't get left behind with the I'm only on big betting on technology stocks kind of stuff. So thank you for watching the video. This is Arvind Rajendran. This has been your February market outlook. Thanks. Bye now. Have a good day.